Hey everyone, it's Kristen Cayley here from Nelson Financial Planning, here to talk to you about a tax deduction that could potentially save you on your tax bill next year. It's a universal charitable deduction. That sounds pretty complicated, but let me explain it with some background information and examples. When filing a tax return, everyone can lower their total income by either the standard deduction or itemizing their deductions. By reducing your income, you are lowering your tax bill. Everyone automatically receives the standard deduction on their tax return, which will be $12,400 for single filers and $24,800 for married filers when you file your 2020 tax return next year. The other option is to itemize your deductions, but you need expenses in very specific categories such as medical expenses, property taxes, state and local taxes, mortgage interest, and charitable contributions. You need the aggregate sum of all these deductions to be over your allotted standard deduction, which is $12,400 for a single person in this case. This is incredibly hard to do because the standard deduction increased drastically in 2018, where in fact it nearly doubled from $6,500 to $12,000 for single filers. So now not only is there a higher threshold, but there are very complex and extensive rules that apply to each category. This is why the federal tax code is thousands of pages long, and this is also why 90% of taxpayers these days just take the standard deduction instead of itemizing their deductions. So all this means that the vast majority of you actually do not get any direct tax savings on making charitable contributions. But the good news for both you and your favorite charity is that on March 27th, the Coronavirus Aid, Relief, and Economic Security Act, otherwise known as the CARES Act, created the Universal Charitable Deduction. This is available to all taxpayers regardless of whether you itemize. The deduction is for up to $300 of cash donations to qualified organizations. Unfortunately, property donations such as giving clothing items to Goodwill does not count. So how much does a $300 charitable contribution save you on your taxes? Well, that depends on your tax bracket. Let's take a look. The Universal Charitable Deduction can save you over $100 on your tax return. This means that come next April 15th, your tax refund could add $100 more to your pocket, or your tax payment could decrease by $100. Sound like a win-win situation, right? So start saving those charity receipts. As always, if you have any questions, feel free to reach out to me directly for advice or a free consultation, or visit our website for more information. Thank you for listening and take care.